Hello friends, I am very delighted to welcome you all in this webinar for discussing the recent High Court case laws. I am first and foremostly very much delightful to thank you to the Tax Guru channel for giving me a fantastic opportunity to present my insights over their YouTube channel. Tax Guru has a cornerstone of the knowledge and support for the very tax professionals as like me, so that I can share my insights and my practical experience and my practical views on the recent case laws, so that everyone can know the practical usage of the recent case laws and how to deal with the particular practical issues. Today we are going to discuss the key issues of recent High Court decisions. And in this particular webinar, your engagement is highly delighted. So please feel free any questions to be asked in the chat box or in a comment box. We will reply in a sessions or after the sessions. So let us start the great learningful lessons. Today we are going to discuss the only practical understanding of the High Court case laws, not the theoretical. That means not just the reading of the particular case laws, but we are reading the detail of the case laws. Here in front of you, my brief profile. Currently, I am a partner at Chetan Agrawal and Company, which is founded since 2000 and having a experience in the litigation since many years. And since last 10 years, I am working with him as an tax consultant and litigation matter for the last 10 years. And we are handling around the many scrutiny assessment here for the every years and covering the issues like a bogus purchase, like a case deposit, like a own money transactions, search assessment and assessment, which is based on the third party informations. Our main expertise lies with the litigations of the income tax. We are specializing in the scrutiny assessment, appeal at a various stage level, as like a CIT appeal, ITAT, and high courts, and as well as the international taxations. We are delivering the strategic litigation legal solutions that are consistently exceeds the client expectations. Majorly, we are physically associated with the areas such as in Ahmedabad, Mumbai, and Saurashtra, but as an online mechanism, we are available with the whole over India. Our main goal, is to empower our professionals so that our professional can use the practical case laws for their regular routine practices and understanding the particular case laws. Here is the list of the case laws for you. What case laws we are going to cover in our session. I am not reading the all particular case laws, but I am reading just the particular things that, okay, what the matters we are going to cover in today's session. Firstly, the particular case law is in relation to the penalty for under section 271D and 271E. Then, most awaited case law for this year, approval of the authority for section 148 AD. The many cases are there where the approval of the proper authority has not been obtained, and on that particular ground only the assessment is being quashed. And another thing is rejection of the condonation of delay under section 1192B. If you have any rejection for the condonation of delay, then this case law is for you. Assessment without opportunity being heard. Many of our professionals and many of the person has been followed that, okay, we do not have granted a proper opportunity. That means the so cause notice has been issued and within a 24 hours or less than 24 hours, the assessment officer is getting the answer from us. So here is the case law for you. Here is the another case law that means the addition on the basis of form number 26 AS. whether addition on the basis of form number 26 is without considering the fact of the cases is valid or not. Here the assessment without the following the procedure which is being laid down. For example, in case of the foreign companies, there is a specific procedure that the draft assessment order must be issued. If the draft assessment order is not issued, which can be against the assessee can file his objection against that. If the procedure is not being followed, then on the basis of that particular procedure, the assessment can be caused. Section 68. Long-term capital gain cannot be said to be bogus if the particular transaction has been done through the recognized stock exchange and the particular transaction has been carried out with the proper banking channel. Another case law is in relation to the section 263. Principal CIT was justified or not for passing the order under section 263. It is being very grateful case laws for the recent cases, because the many of the particular case laws are being revised by the principal CITs, but without considering of the fact. And another thing, can the notional income, that is notional profit, at present everyone is dealing in the share market, so everyone is engaged in the share market and viewing in the mobile that my profit is being, unrealized profit is that much and unrealized profit is being that much, but it is not being realized. So is the unrealized profit is being taxable or not? That particular thing is being covered here in this case law. And whether the addition can be differ from the show cause notice, that means the in show cause notice you have been asked to provide them, for example, you have been asked to provide a proof in relation to the unsecured loan, but in the final assessment order, your addition is being made in relation to the bogus purchase. Whether that particular addition can be sustained or not. So now we are going to detailed discussion on the each and every case laws. So let us start with our first case law, CIT versus Vamsi Chemical Limited, which is being announced recently in 2024, which is citation is being specifically mentioned on the screen. You can note it down for your future references. Here, what is the question of law? Because in High Court, when the matter has been reached to the High Court, when there is a question of law arises, and when there is a substantial matter, at that particular point of time only the matter reaches to the High Court. Here, what is the question of law? Whether tribunal is correct or not in deleting the penalty under section 271D or not. Here, in the all particular case laws, we are following the same procedure and we are following the same method to understand the particular case laws. That we are going to, we will first present you the issue and we will first present you the fact of the cases, what are the sections covered in the particular case, and what are the material which is being analyzed by the court for taking the decision of the case. Let us start with this case law only. Here, issue is what? The amount received on account of the share application money and repayment of the same did not violate the provision of section 216 and SS or T or not. Here, the assessee is a company has receiving the amount for a preference share capital in a case from the shareholder. Whether the particular amount received in a case is violating the section 216 and SS or not is the main issue in the particular case. That means I have briefly stated you that company has received the share application money in relation to the preference share for exceeding rupees 20,000 from the every person. Here, what are the section is being covering? The section 216 and SS, sorry, section 216 and T, section 271D, and section 271E. Here is the basic 4 section is being covered under this particular case. What the material is being analyzed by the court? The ITAT order, which is being covering for the 8th appeal, which is being filed by the assessee for the assessment from the 2004-5 to 7-8 is being covered in this particular matter. Here the question is what? The question is in relation to that okay, whether the share application money is being received can be termed as a loan or deposit. If the particular thing that if that particular thing is being not covered in the loan or deposit, then section 269 SS and section 269T will not attract at all. For that particular understanding, we have to go to the specific analysis whether the share application money is being received by the company is treated as a loan or not. In this particular case law, court has been observed these only. Let us understand the court's observation. Court has specifically stated the section 269 SS. That means we all know what the section 269 SS is being saying. Section 269 SS is specifically saying that any person cannot accept the amount which can be exceeding 20,000 rupees in a case. If the particular person is accepting the particular amount in a case from the other person, then 269 SS is being attracted. Section 269T. Section 269T, as we all know, section 269T is in relation to the repayment of the loan in a case. Section 269D. What the section 269D is saying? Section 271D is saying penalty for the failure to comply the provision of section 269 SS. That means if we are violating the section 269 SS, then the penalty under section 271D will be leviable. But if we prove that our acceptance of the money is in relation to the capital, which cannot be termed as a loan, then that particular penalty is not leviable, because we have specifically proved that amount is not for the loan purpose and amount is for the capital or capex purpose. Section 269E is in relation to the penalty for compliance of section 269T. That means if any person is repaying the loan in case, then that particular provision has been attracted. Here, the court has been specifically analyzed that definition of loan and definition of deposit. That means definition of loan and definition of deposit under ITA, which is being specific and cannot be expansive. That means each and every officer or higher authority cannot interpret the particular section beyond the wordings mentioned in the section. That means the word is a specific. That means every code has to be a specific in relation to the wording and in relation to the interpretation of that section. Section 269C, 269SS and section 269T is in relation to the loan or deposit. That means with that particular section, you cannot say that whatever amount received as a capital contribution can also be termed as a loan, and penalty can be invoked on the section 269 D or section 271E. That means the share application. Here the court, what the court has interpreted, the share application money which is being intended for the participation. That means which is being participation for the company's share capital. Here the specifically company has taken the amount for the participation of a capital. Company has not taken the amount for any kind of loan. That means company has a capital participation. It has not accepted any kind of loan. That means it does not qualify for the loan or deposit, as specified in section 269 SS and section 269 T. That means I have firstly said that we will be following we are covering the 10 winning strategies, man. That means we are covering the 10 case laws, but we are in this particular presentation, I have covered the case laws and whatever the other case laws which is being referred by the court only, court itself, that case laws is also being covered by me. That means we are following that means we are dealing with the fact of the particular cases, issues and court's observation, and then after the other particular case laws which is being referred by the court. And after that, whatever practical takeaways from the particular the case laws, we will discussing that particular thing. Here, the another cases which is being considered as a reference in this particular case is Assistant Director of Inspection Investigation versus A.B. Santi. That means here what the court has been interpreted, The main object of section 269T is to prevent the tax evasion, ensuring the taxpayer cannot give the false explanation of unaccounted money. That means if any person is being accepting the particular amount from the any other person and giving the any other person's name, that means he is trying to hide unaccounted money. Here in this particular case law, what the court has been doing, the court has observed that unaccounted money, explanation of the unaccounted money should not be scrubbed at anywhere. So that reference has been taken from this particular case. And another case law, CIT versus Bazapur Cooperative Sugar Factory Limited. That is, here the essence of deposit is being undertaken. That means we are taking the amount as a loan and amount as a deposited. If the particular thing, if the amount received is considered as a loan or deposit, then and then only section will be attracted. Otherwise, section will not be attracted. That the essence of the deposit is the liability to return the amount, amount with the specific purpose. That means if there is a no purpose to return the money, that it cannot be said to as a deposit. Another case law is being referred by the particular case in his case law is Kesolal Kemchand and Sons Private Limited versus Union of India. The loan is the advance of money under an agreement to repay the agreed terms. Here, what we can analyze that here there is an agreed term to repay the any kind of loan. If there is a no repayment of intention, that it cannot be said as a loan. In this particular case law, the share application money which does not fall under the definition of a loan as per the explanations which is being provided under section 269 SS and 269 T, it can be said as a participations in the company's capital and not repayable after the notice period. Hence, the share application money cannot be termed as a loan and penalty for the particular loan cannot be invoked. Here, there are certain things, there are certain practical takeaways which should be carried after understanding of this particular case. Here is the practical takeaways. What we should understand from the particular case laws, and we should must read and must gather these particular takeaways after reading of the case law. Adherence to the section 269 SS and section 269 T. That means we have to ensure that all high value transactions are through the account pay checks or draft only. If the amount is being accepted within the case, then the penalty must be attracted under section 269, 271A, 271B and section 271E. Importance of documents. That means maintenance of the document is being very much needed. If we are not maintaining the proper document, then it can be said that certain document has been demanded by the officer, then we will not be able to provide the document. Role of legal representation. That means your counsel must be effective so that he can defend in matter. Judicial clarification and precedent. That means that we have in each and every submission. That means we are following the particular practices, and I also should recommend you all to follow the particular practice that in a case of the scrutiny assessment only, at the stage of scrutiny assessment, you should also quote the certain decision, that is judicial clarification and judicial decision which has been in favor of you, so that the cases must be in favor of you. Okay, this is the practical takeaways which everyone should take from this case. Now, let us discuss our second case law, which is Ramchandran Sivam versus ITO. Citation of the case is 2024 tax publication DT 11338, which is being announced by Madras High Court on 4th March 2024. Here, what can be the question which is being question of law? That means, what is the question of law and why the particular matter has been referred to the High Court? Whether the amendment under section 151 and for specific approval of the specific authority is being applicable in this particular specific time limit or not. If the time limit is being elapsed, then the specified authority has to give the particular permission for reopening of the assessment. If the particular procedure has been specifically left out, then the assessment do not have the validity. Then assessment can be paused. Here, what is the issue? The notice and order were issued without getting the proper approval from the higher authority as required by amended law. That means the law has been amended by the famous case law, the Assessees case law, which we will be discussing later on in this particular case law only as a referred case law. The amendment has been applicable or not. Then notice issued without proper authority. If the base, which we can say that if we are constructing the particular residential house, but our base is not proper, then whether our house is being stained or not, definitely no. That means here is only the particular thing. If the permission in relation to the reopening of the assessment is not obtained from the proper authority, then the assessment must be paused. What are the section is being covering over here? Section 151, section 148, section 148 AD, section 149. What the material is being analyzed by the court? A notice under section 148. That means the notice issued without the prior approval of the specific authority. That means we have to see the specific notice. That is in the notice what the specified who is the authorized person to issue the particular notices. Draft assessment order under section 144B was analyzed and challenged for the assessment year 1617 and 17. Whether amendment of the particular section 151 is applicable to this or not, we have to understand. We will understand by the end of this particular case. And the court has been analyzed section 147, section 148, 149, 151 that constitute the interconnected package of the provision which cannot be interpreted isolation. Here is the main condition which is being analyzed by the court. That means if there is a one section under the Income Tax Act, if you isolate it, that means if you are interpreting that particular section individually, then the meaning of the particular section has been different. But if we analyze the particular section with the help of other sections, that means with the applicability of the other section, which is being compulsion in the nature, that means it can be said as a bundle, that is package of the provision. That means which cannot be interpreted in the isolation. Here is only the case of interpreting the section in a package manner. Let us understand what is the court's observation. Court's observation is in relation to the section 148 AD, 148, 151 to 144B. Here is the section which is being analyzed by the court. Let us read the particular section. Section 148 AD. This section outlines the step that must be followed before sending the notice to the reassess to the taxpayer's income. That means section 148A, section 148AB and section 148D. That means initial notice must be sent to the office, sent to the assessee. Then after initial inquiry must be conducted under section 148AB. Then order must be passed under section 148AD. If any of the procedure has been left or any of the thing which is being not followed by the specifically, then assessment can be paused. For example, in any of the cases, the Income Tax Department has not specifically followed the procedure as specified under section 148AB, then that particular assessment does not stand the validity in the higher court. Section 148. This section deals with the process for the sending of the notice to the taxpayer. Here, section 151(2). This section specifies who must approve the sending assessment, reassessment notice for an older case, which is being more than 3-year older case. Very senior officers like a principal chief commissioner or principal director must have to give the prior approval in the particular cases. That means without the approval of the higher authority, If the notice is being issued, then the assessment does not stand at the higher court. Section 144B. This section is related to the process of faceless assessment, where the tax department interact with the taxpayer without the direct contract and using the electronic means instead of a physical mode. This particular means after the specified period, the every notices must be issued in a faceless manner. If the notice is being specifically issued with the jurisdictional officer, that means local officer, then the specific procedure for the faceless assessment is also not followed, and in that case also the assessment does not stand at a higher level. Let us see what the court has been analyzed in the particular section. Section 151 and section 149. That is very much important to understand the particular cases. As said before by me, any interpretation of the particular section must be done with an interconnected as a package of the provision, not an in isolation. That means if you are understanding the if you are reading the particular section 151, then you should also concentrate and you should also connect the section 149 for the time limit of the particular notices. Here, let us read the section 151. 151 says that specified authority for the purpose of section 148 and 148A. Who is the specified authority which can issue the notices for the reassessment of the case? Principal commissioner or principal director or commissioner director if 3 years or less than 3 years has been elapsed from the end of the relevant assessment year. That means if your case is in between the less than 3 years, then that particular permission in relation to that case must be given by the principal commissioner or principal director or commissioner. That particular authority can give the permission for the less than 3 years case. But if your case is fall beyond the 3 years, then who can give the permission? The principal chief commissioner of income tax, principal chief commissioner or principal director general or chief commissioner director general. If the particular case is being falling more than 3 years, it's been elapsed on the relevant assessment year. Okay. Section 149. Here we can understand the particular with the specific example that if your assessment is going to reopen at present for the assessment year 9-10, supposing your assessment say suppose for example you have received the notices for the assessment year 12-13, that means which is being beyond period of 3 years, that in that particular case the principal chief commissioner must have to give the permission for reopening of the case. And another section which I have told that only individual section cannot be interpreted, but the time limit for the particular notice issuance should also be construed. That means no notice under section 148 shall be issued for the relevant assessment year if 3 years has been elapsed from the end of the relevant assessment year, unless, that means if the particular case is fall in the category B, then and then only you can issue the notices. Otherwise, you can issue the notices within the time limit also. That means what are the particular cases? What are the conditions mentioned in clause number B? Let us read. If the 3 years but not more than 10 years has been elapsed from the end of the relevant assessment year, unless the assessing officer has in the possession of the books of accounts or any other document which reveal that what the assessing officer has a certain document which reveal that assessee is in that particular document which is being represented that assessee is in possession in form of an asset or expenditure in respect of the transaction in relation to the event or occasion, for example, marriage function, or an entry in the books of accounts which has been escaped with amount to or likely amount to exceeding rupees 50 lakhs rupees. That means if the income tax office has to reopen your case, then if it is being beyond the period of 3 years, then principal chief commissioner approval is required, but in which case? Where the assessing officer is being certain information which is form part of asset, form part of expenditure, or any other entry which is exceeding rupees 50 lakhs, then and then only the reassessment can be opened with what? With the principal chief commissioner approval. Otherwise, this particular case cannot be reopened. The court's observation in this particular case is a specific to the authority's permission. If the court has been observed here that if the permission has been not obtained for the from the specified authority, then the assessment order cannot stand. As I have stated earlier, we are not referring just particular case laws which I have mentioned in the second case law, but we are also referring to the other case laws which is being referred for that particular case laws by the High Court. Here is the certain case laws which is being referred by the High Court for giving these particular decisions. That means the case of Ramchandran Sivam versus ITO. In these particular cases, there are many references being obtained by the court. Let us see the particular which are the case laws which is being referred by the High Court. That means Union of India versus Ashish Agarwal, which is being very famous case laws for the with the help of which basic amendment has been introduced for the reassessment of the cases. Supreme Court has been directed in this particular case. Supreme Court has been directed that old notices under Section 148 to be treated as a notice under Section 148 AD. That means whatever notice has been issued under Section 148, which is being time limit and which requires the procedure to be followed, that is being deemed. That particular means that is the deemed that that particular section is being followed by the assessing officer, and reopening of the assessment will be done on these cases. Here is the particular case laws which is being very useful, that Siemens Financial Services Private Limited versus Deputy CIT 2013 154 taxman.com 159, which is being announced by the Bombay High Court, in which court has been specifically analyzed the validity of the Section 151, that is with the help of amendment. That means if the specified authority is not giving the proper permission, if the specified authority is not giving the permission with the specified time limit and with the specified limit, that means 50 lakhs of rupees limit for the asset and any other thing which is being mentioned under Section 149, then that particular assessment is caused and that particular assessment does not stand any validity. Here is the other case law, Twilight Infrastructure Private Limited versus ITO. Here is also the particular thing is that approval under amended Section 151 is very much necessary proceeding which is being initiated post amendment. Another case law is referred here is Rajiv Bansal versus Union of India. Court has discussed here the applicability of TOLA for the time limit that is being related to Section 151. From the all of the particular four cases, what we can take from this particular case for our practical usage of life. That means we can take that if the notices and order has been issued without the proper sanction, that means whatever authorities has been specified in the particular law, if the sanction has been not been obtained, then that particular assessment does not stand and does not have any validity. Let us understand certain practical takeaways from this particular case. What as a professional we can do to save our client. That means we have to ensure that proper sanction from the specified authorities. That means we have to verify that if you have receiving the specific notice from the client, then firstly you have to check that whether the specified, that means whether the sanctioning authority has been sanctioned the notice for the reassessment or not. We have to stay also updated with the legislative changes. That means as the case of the Ashish Agarwal versus Union of India, in that we have analyzed that the section, all the section, whatever notices has been issued in the old provision can be deemed as an deemed for the notice under section issued, notice issued under new provisions. Validity of notices and orders. If the procedural lapse is there, then such an incorrect sanctioning authority, that means Twilight Infrastructure Private Limited is been specifically dealing with that. Okay, the procedural lapse has been analyzed in the particular case and the order has been caused. Leverage of judicial precedence. That means we have to come into picture over here. We have to certain mentioning the particular case laws at the assessment stage only, so that unnecessary litigation will not crop and you are not being trapped in any kind of situation, so that you have to remember certain case laws which is being provided here presentation. Here certain another, let us discuss the another case laws which is being Optra Health Private Limited versus additional CIT, which is being very much useful, where the condonation of delay is being rejected or condonation of delay is there, but condonation of delay is on certain procedural aspects. That means which is being beyond the control of the assessee, then that particular condonation of delay must be termed in a liberal sense. Court has been analyzed here only the liberalization of the interpretation of the section. Here, what is the question of law? Whether principal chief CIT was justified in rejecting the condonation of delay under section 119(2)(b) of the Act due to, what is the error? Due to the error in the name, company's name on the income tax portal and in income tax return, which is being mismatched and which is leading to the mismatch of the particular thing. Here, what the thing is being happening, the particular company has been company has filed his return, and then after company has changed his name, and after changing his name, company's name is being updated at income tax portal, but in an income tax return, the company has already filed the return, so that the particular things, the particular things is being not being amended in the income tax return. So they have received the notices, and in that particular notices, I am showing the particular event table later on in this particular things, but in this particular things, the condonation of delay has been applied and which is being rejected by the principal chief CIT, not a once but twice in this particular same the case, and in that particular court has been directed, and the court has been directed for the validity of return. Principal CIT, what is the issue? Let us discuss the stepwise. What is the issue over here? The principal CIT has rejected the condonation of delay due to name mismatch and in the income tax portal and name mismatch in the PAN number. What are the sections has been covering over here? Section 119(2)(b) only. Here, order against the tribunal has been observed that error was a purely administrative, which is relating to the company's name mismatch in a PAN number. Tribunal has been rightly observed that the particular name in the error doesn't have any kind of the validity or any kind of thing which is being affecting the revenue of the income tax department. Hence, the tribunal is being accepting and tribunal has been observing the proper thing that is an purely an administrative thing and which should be interpreted liberally. Here, the principal's contention is what? The condonation of delay is rejected twice. I already told. Argued that companies failed to prove the genuineness of the hardship and the delay, which is for the internal mismanagement. Here, what is the issue? The company and its management has an internal issue, which is being out of the control. Certain times it happens that at certain times, whenever the principal CIO, whenever we are doing any kind of activity, that particular thing is being out of our control, but we cannot control that situation. Then that particular thing should be understood by the income tax department and liberally. It should not be understood in relation to the word which is being mentioned in the sections. Here I have mentioned the certain events, that is dates of the events which is being happening in the particular cases, that the assessee is being traveling from 2017 assessee is being traveling for a justice from 2017 to 2023. You can see from the chart over here. Let us see what is happening date wise. In 2017, SSE has filed the RTR, and in 2017 only, company has changed its name. That means 25th January, company has filed RTR, and 31st January, company has changed its name. And then after, company has received the notice under section 139 for the defective return, as we are receiving in the certain SSE. The final notice is also been receiving under section 139. That means in between, what the happening over that, in between, the responsible person which is being dealing with regular company's affairs is being left to the company. That means whatever the digital signature or whatever the company's profile is being updated with his name only, so that company cannot do all the things, all the actions immediately. Application is being filed to rectify the ITR. That means 2019 application is being filed. In 2021, PCIT has rejected the application for condonation of delay. For that, the SSE has referred the High Court, for which High Court has quashed the PCIT's order and remanded the matter for the duo motu consideration. But the PCIT, what they have done, the PCIT again rejected the condonation of delay in 2022. And again, the particular SSE has been reached to the High Court, and in the particular High Court has quashed the PCIT's order and directed for the correction of company's name in the income tax return itself only, so that the no mismatch communication is being considered by that. Here, in this particular case laws also, the court has referred certain case law, which is mentioned over here. Let us discuss the certain other case law which is being specifically dealt to conclude this case law. Sitaldas versus K. Motwani versus DGIT, that is International Taxation Case Law. Substantial justice is the main motto and main conclusion from this particular court. This particular court's decision. Court held that genuine hardship should be construed liberally. Here, what we have discussed before in the event chart of the company, we have discussed that a particular person who has been dealing in the particular regular affair of the company has been left, and there is an internal issue. And due to internal issue, company is not able to rectify the particular mistake, or a company is not able to rectify in time. So that has demanded the condonation of delay, but condonation of delay has been rejected by the department. PCIT has been interpreted that the condonation of delay should be with the proper justification and the proper timing and all the things. But here, the section 1192B should be should be construed by the PCIT in a liberal meaning. It is being taken from this case law. B.M. Malani versus CIT. What the thing is being taken from this particular case law? Defined genuine. Here, the defined genuine as a not a fake or counterfeit, emphasizing that importance of substantial justice over the technical consideration. That means if there is a genuine mistake, then that must be considered by the officers, so that there should not be any unnecessary litigation is being happening for that. Another case law which is being taken as a referred case law in this case is what? Artist Pre Private Limited versus CBT. Culpable negligence. Substantial justice should be prevail over the technicalities. Means that court or any of the authority should provide the substantial justice to us. They should not follow, or they should not interpret the particular provision as it is only. They should they should particularly give the liberal meaning to the section, so that any of the matter in between that particular matter is being covered. Here, what is the thing has been happening here, that misplacement of TDS certificates during the office relocation. In this particular thing is not affecting the revenue, but that particular thing, if understood with the liberal, then that particular thing, that court must condone the particular delay if this kind of issue has been happening. This does not have any kind of technicality, but it is just an administrative issue. What are the practical takeaways which can be taken by us with the help of what are the learning we can say. This case specifically highlight the importance of liberal, as I am continuously saying that liberal interpretation of genuine hardship which is being faced by the taxpayer. That means genuine hardship is being faced by the taxpayer, then must be considered. It emphasized that administrative error should not prevent the rectification of ITRs, especially when there is a no deliberate negligence or mala fide intention. In particular, in present case, there is a no mala fide intention of the SSE. SSE has been trying to file the particular case, but the employee is being lefted from the company so that SSE is not able to file the rectification in a due time. The judgment reinforced that the procedural delay should be obstruct substantial justice. That means substantial justice must be given rather than an administrative procedure should be followed. Administration procedure should be strict. How that particular case law has been used as a practically for us, it can be cited. That means we can mention the particular cases in the situation where the genuine administrative error is being leading to the delay of the compliances. For example, the digital, we are facing the particular issues that any of the person is being not able to get the Aadhaar from the department due to his fingerprints. If the particular thing is being delayed, that means a return is being delayed due to not getting the Aadhaar authenticator or not getting the particular thing which is being administrative, then in that particular situation, we can cite these particular case laws as a references. What conclusion can be drawn? The Bombay High Court underscored the need for the justice-oriented approach in the tax matter, ensuring that a genuine administrative error does not result into the undue hardship for the taxpayer. That means liberal interpretation must be adopted instead of the word-to-word meaning has been taken from the any of the sections. Let us discuss the another case laws. Chi Chelaram Muthu versus Principal Commissioner, 2013, text publisher 7717, which is being declared on 12th December 2013. What the happening over here? It is very interesting case law. Here, what is the issue is that SSE is an agriculturist and SSE is been doing the very much good agriculturing activities at his farm, and in that particular case, SSE has sold the 49,551 kgs of seeds, certain seeds which is being very much valuable, sold the particular two things, but SSE's case has been selected for the scrutiny and assessing officer has been issued the notice for the limited scrutiny to verify the large agriculture income. Which agriculture income? You know, the agriculture income which is being duly accepted in others year's assessment also by the department. The same SSE and the agriculture income is being duly accepted by the department, but for this year, the matter has been reached to the High Court. Let us understand what the issue has been happening over here. Here, main issue is the language barrier. That means, at present, I am sitting at a Jamnagar, Saurashtra. That means Jamnagar, Gujarat. If I'll speak in a Gujarati, but if you are insisting me only to give the explanation in an Hindi or explanation in an English, that means if I am demanding the justice for me, but I do not know the English or Hindi language, is the particular thing that justice will not give to me. The court will not give the justice to me on the language barrier. That particular thing is being happening in this case only. Language is the main barrier to reach the case law to High Court. Petitioner has provided the certificate from the village administrative office in the Tamil. That means SSE is being residing of the Tamil Nadu and provided the certain certificate from the village administrative offices. Assessing officer has been insisted in English or Hindi translation contrary to the local practice. The SSE has submitted that all the administrative certificate has been issued in this particular language only. But the assessing officer is not accepted his contention and demanded the certificate, and the case has been reached to the High Court. Here, what is the issue? The proceeding has been requested. The two so cause notice has been issued, not a one so cause notice. Two so cause notice is issued, and the time, the 18 hours of time only is being provided over here. That means you have received, practically we can say that if you have received the notice for the yesterday at 8 p.m. and you are required to reply at before 10 a.m. today, how can we reply? Here the case is also the opportunity in relation to the opportunity. Here the principle of natural justice, that is denial of video conferencing request, which is being demanded for the short response time in the so cause notice, which is also being denied by the assessing officer, which cannot be termed as a proper practice by the assessing officer. Let us see what the court has been observed over here. Language certificate. That means court has specifically observed that the valuation certificate has been issued in a Tamil language, which is the standard practice in a Tamil Nadu, cannot be said to be the barrier for making the addition of the huge amount. Assessing officer has been insisting the certificate in English or Hindi language, which will not be justified. It is observation of the court only. Assessing officer should have directed the assessee to provide the translated copy instead of insisting the initial submission for the another language. That means if the assessing officer is being not able to understand the Tamil language, it has been obvious that I am in Gujarati and I am not able to understand the Tamil language. But in case whatever I am not able to understand, then I should request the assessee that you should provide the translated copy of the same certificate. If the translated copy of same certificate is not provided, then that particular thing should be considered another position. But if you are demanding the initial certificate in an English language or Hindi language, which is not the standard practice over there, it cannot be said to be a proper practice. In this case, the assessee has also demanded the video conferencing through the mail. Let us see what the court has been analyzing. The court has been noted that assessee has requested the video conferencing via mail due to the high pinch assessment. Means the assessing officer has been issued the so cause notice, and in that assessing officer has proposed the addition for the huge amount of the addition, for which assessee is requested for the video conferencing. But in that particular thing, video conferencing is also not being granted by the assessee officer. The court has been principle of natural justice. That means principle of natural justice. The court has emphasized that denying the assessee's opportunity for personal hearing through the video conferencing is being violated the natural principle of justice. It is the case like that. I am going on the road, and any of the one has been saying that you has left me, and I will file the case against you. But if I do not have given any kind of opportunity for what I am saying, that if the particular case is against me, then what should be the case for me? That means it is the violation of natural principle of justice. That means I should also give an opportunity so that what is my contention, and I can also submit over there. Here another issue is what? The short response time, that is 18 hours of time only is being given to show cause notice reply. Court has observed the certain evidences also. The court has found that assessee has followed the proper banking channels for the transaction and support the claim of the agriculture income. Here, what is the issue? The court has been observed that assessee has received the entire amount of the consideration for the agriculture income in banking channel only, so that it can be it can be easily proved that whatever amount has been received from the banking channel or whatever amount has been received from the banking channel, it can be said as an agricultural income if the assessing officer has analyzed the certain things. But in this particular case, assessing officer was not ready to hear anything. AO has made an addition to the income without adequately considering the evidences which is being provided. That means bank statement, agricultural income, whatever is being provided, but assessing officer intention is not that, then the order has been reached to the High Court. Impugned assessment order was caused ultimately. What the court has been done, court is doing that the assessment order was caused and AO was directed to complete the reassessment within the 8 weeks with not an initial English translation copy for the certificate, but translated copy for the certificate demanded by the officer, and the assessment was concluded later on. Here also certain other case laws which is being referred. It is, I think this particular case law is not in relation to the income tax, but from this case law, the fundamental right, that means opportunity of being heard, that means any of the document which is being submitted by the particular client must be considered. This thing has been taken from the other case laws. That is Whirlpool Corporation Limited versus Register of Trademark. Fundamental right. What the court is being taken from these specified case laws. If there is a violation of fundamental right, then aggrieved party can directly approach to the High Court under which article? That means our Constitution's article 226. The SSE can directly approach with the help of Article 226 of our Constitution. For what? For violation of fundamental rights. Principle of natural justice. A writ petition can be entertained if there is a breach of natural justice, such as a not providing a fair hearing process. In our case, what the thing has been happening, the assessing officer has been issuing the notice, but the client, that means SSE, has been provided only short time to provide the documents, which is being not proper. That means assessing officer has violated the principle for natural justice. That particular principle of natural justice being taken from this case. Jurisdiction. If the action or decisions are taken without jurisdiction, they can also be challenged. That means if the assessing is not being considering any kind of document and going without his jurisdiction, that can also be challenged under Article 226 of the Act. 226 of the Constitution of our India. Timing. So the reasonable procedural timing are the crucial for uploading the justice and the procedural fairness. That means if any of the officer has been issuing the notices at 8 p.m., then demanding the reply of the particular notices to the next day, immediate next day morning, that it is not possible for anyone to submit any kind of document. So the timing is not provided, then we can refer the particular case laws and demanded justice for our case. What the things we should take from this case? Ensure proper translation of document. Here, what the case is that the assessing has been issued the certificate which is in Tamil language. But if we are following the practices as like that, if we are getting the certificate, at present I am in Gujarat, I am getting the certificate from the Talati Mantri in relation to the agriculture income in Gujarati, then with that particular certificate, we should also submit the translated copy of the certificate so that it is being helpful to us in getting the justice at the initial stage only. Adherence to the procedural fairness. That means we have to respect and respond to the request of the personal hearing. That means whatever the personal hearing is being reaching to the us, we should always reply to the personal hearing in the reasonable time. Reasonable time must be allotted by the officer. But if the assessing officer is being giving the particular time, that is 8 p.m. notice is then immediately next day replying the demanding the reply, but for the situation like that, we can use these particular case laws for the demanding of time. Maintain the comprehensive document, that is, keep the detailed record for the all transactions and communication to the claim support. Here in this particular case, the SSE is being referring that all the agriculture income is being reflected in his bank account along with the agriculture income bill, so that it is being submitted in the court and it is being literally immediately proved, and the SSE has got the relief. Here is the another case law. Let us see the Sinogas Management Private Limited versus Deputy CIT. What is the question in this particular case law? Issue is what? The non-compliance with the mandatory requirement of section 144C subsection 1 by the assessing officer. That means if the assessing officer is not following the specified procedure, that is, what is the question over here? Failure to issue the draft order which is being required, which is the basic requirement, not the requirement, which is the basic requirement under section 144C subsection 1 of the act, that passing the before final assessment order. If that particular thing is not being followed, that means procedural lapse is there, then the particular order which is being passed with the procedural lapse, that can be caused. What is the fact here? The assessing officer has passed the order giving DTAA benefit, that is, DTAA benefit has been given by the officer, and in that particular thing, after that passing the assessment order, another notice is being received from the Commissioner of Income Tax regarding the revision of order. That is means, and in that revision of order, after that, in second proceedings, the assessing officer is being lapsed the procedure. That means assessing officer has been bypassed the issuance requirement of the draft order section 144C subsection 1, whether it is valid or not. It can be, let us understand with the help of this particular case. What are the section which is being covered over here? Section 263, that is revision of the order which is being prejudicial to the revenue, prejudicial to the interest of revenue. Section 263 applies only in case where the order is being passed by the department, but order is prejudicial to the interest of revenue. Only that time section 263 attracts. Section 144C1, mandatory issuance of draft order, assessment order. What the material is being analyzed? The initial assessment order was not erroneous or prejudicial to the revenue. Revisional order without the draft order. That means in the first assessment, that is in the first proceeding, SSE's order has been passed with the by providing the DTAA benefit, but then after revision assessment order has been passed, and in that revisional, assessing officer has been bypassed the particular issuance of specific order, that is it valid or not. Let us see. Whatever procedure has been specified in the income tax department can be termed as a safeguard to the SSE. That means if any kind of the procedure is not being followed, then the assessment can be paused. Let us understand the court's observation. Court has specifically mentioned certain sections and its interpretation in these case laws. Let us see section 144C of the Income Tax Act. What the section is saying: assessing officer shall, notwithstanding anything contrary to the act, first instance forward the draft proposed order to the eligible SSE if proposes to make after 2009 any variation to the income or loss which is prejudicial to the interest of such SSE. That means what this particular section is being saying: if any of the order is going to passed by the SSE officer against the SSE, that means which is prejudicial to the interest of SSE, then the draft order must be passed by the officer and must be communicated to specified assessee. On the receipt of draft order, eligible assessee, what eligible assessee can do? On the receipt of the draft order, eligible assessee within 30 days from the date of receipt by him file his acceptance. That means if the assessee is being saying that I am really accepting that particular thing which is being done by the mistake, then file an acceptance of the particular order, or he can file an objection, or objection with what? Objection with a dispute resolution panel and assessing officer both, so that assessee has given a final opportunity, so that assessee can submit any kind of the additional documents, so that the unnecessary litigation can be avoided. Here, what is the eligible assessee? Eligible assessee means what? Any kind of the person who specifically mentioned over there. But in the particular cases, any person, any non-resident person, not being a company or foreign company. That means foreign company can be termed as an eligible assessee. Court's interpretation. Let us see what the court has interpreted in the particular case. Court has said that mandatory requirement. The court interpreted the provision of section 144C as a mandatory and requiring the assessing officer to first issue the draft assessment order to eligible assessee. If the eligible assessee is not receiving the draft order, which is being mandatory requirement by the law, then the mandatory procedure is not being followed, then the order can be quashed. Non-discretionary nature. That means whatever the procedure is being specified in the section, whatever procedure that is non-discretionary nature, that is the court has highlighted that section 144C begins with the non-obstacle clause. That means the assessing officer has to strictly follow the particular procedure, so to conclude the assessment. If you are not following the particular procedure, then assessment cannot be said to done a proper manner. Right to raise an objection. Section specifically provide the right to raise the objection. By requiring a draft assessment order, the provision afford the assessee to raise an objection before whom? Before dispute resolution panel as specified under section 144C2. Who can be termed as an eligible assessee? The eligible assessee's definition. The court reiterated that the definition of eligible assessee under 144C15 emphasizes that it includes the any kind of the foreign company. Our case is in relation to the foreign company. Judicial impact. The court ruled that failure to issue the draft assessment order under section 144C result to the judicial defect. That means if you are not following the proper policy and proper guidance which is being specifically mentioned in the act, that this particular procedure is being followed and which is in favor of the assessee, the in favor of the assessee procedure must be followed. If the procedure is being not followed, then it can be said as a judicial defect. So the assessment order can be quashed on the basis of judicial defect. What are the other case laws which is being referred over here? Truner International Private Limited versus Deputy CIT. Delhi High Court, in that particular thing, Delhi High Court held that failure to follow the mandatory procedure which is being laid down under section 144C clause 1 render the final assessment order to be invalid. If the procedure is not being followed specifically, then assessment order what is being passed without following the procedure can be termed as an invalid. Court emphasized that the non-obstacle clause, as we discussed earlier, whatever clause is mentioned in section 144C1 is being compulsory in nature. It is not that the assessing officer may. Assessing officer must have to follow the particular procedure to conclude the assessment. The other thing is also Nokia India Private Limited versus additional CIT. The Delhi High Court has been held that in favor of Nokia Private Limited, holding that failure to issue the draft assessment order under section 114C1 is invalidate the final assessment order and consequent to the demand and penalty notice. Whatever the demand and penalty is being generated with the draft assessment order without issuing the draft assessment order is completely invalid. Delhi High Court ruling in the particular case, what we can take from this particular both case, Delhi High Court's ruling in this case serves as an important precedent, reinforce the mandatory nature of the issuing of the draft assessment order to eligible assessee and jurisdictional impact for the non-compliance of validity of the final assessment order and related notice. If the assessing officer has not followed the specified procedure which is being laid down under the Act, then assessment does not have any kind of validity and it must be quashed. What we can take, that is up to this, we have taken a certain takeaways from the every case laws. What are the practical takeaways that can be get from this particular case? Ensure the procedural compliances. Always verify. As a consultant, we have to always verify that assessing officer has adhered to the mandatory procedural requirement. If the assessing officer is not following the mandatory procedural requirement, then assessment order does not have the stand at any stage. Leverage for the non-compliance for the defense. Here, I have specifically mentioned for our legal professional, we have to use the non-compliance procedural requirement as a strong defense to invalidate the erroneous of the assessment order. There are certain cases in which the procedural, in which the specific, we can say that there cannot be evidences is available with us or any other issue is being that. But if we take the advantage for the non-compliance procedural requirement, then the case can be win. Case can be in our favor. Understand the judicial defect, that is non-compliance of the mandatory procedural requirement can constitute the judicial defect. That means non-obstacle clause. In every, there are certain section income tax, there has a certain non-obstacle clause. If the non-obstacle clause is not followed by the income tax department, then it can be used as a defense. Refer to the established case laws. We can use the other references as we have seen that in this particular case laws also High Court has referred the other case laws. Let us move to the another case law, CIT versus Centron and Morgans. It is a very interesting case. Every CA, I think every CA or every advocate has certainly followed that particular practice which is being followed by the by this particular assessee. Here, what is the question? The question of law, whether the tribunal below committed the substantial error in invoking the fact that alleged out-of-pocket expenses had been exclusively kept out of the books, and upon the reimbursement by the client to the assessee, it was a duty of the assessee to route the same through the profit and loss account, and in absence of such course being taken, whether the assessing officer was justified in adding the same amount to the total income of the assessee. Have you got what the question of law has been said? Let me explain. We are at present we are every CA, I think every CA advocate or every person is being following and providing the services to their client, and they are giving the facilities that if the particular client does not have the bank account, but there are certain requirements that the amount should be deposited. For example, TDS for the audited deductee must be deposited through the banking channel, through the online payment system. But the client does not have any bank account which has a banking or online facility. For that client, we are providing the services. We are taking the check from the particular client for payment of the tax, and from that particular payment, we are making the payment of tax on behalf of the client. That means 1,000 is being received by me for an appeal fee. That means for submitting the appeal to the CIT, there is a requirement of 1,000 rupees payment to the CIT appeal fees. I am receiving the client. I have received from the client 1,000 rupees as an appeal fee for the making the challenge payment. If that challan payment is being made by me, whether it can be termed as my income or expense or not. This is the basic question in this case law. As said by the me, whether out-of-pocket expenditure must be routed through the profit and loss account. Here, the assessing officer's contention was what, the assessing officer has added. Assessing officer has added 3 crore 74 lakh 85,859 to the assessee's income, arguing that whatever amount is received by the assessee must be routed through the profit and loss account. What is the case over here? In this particular assessee, there are his certain client has deducted the certain amount of TDS in the payment of for a certain expenses, and that particular the assessee has made the payment, same amount of payment for a reimbursement of certain expenses on behalf of the client. Whether that particular income or whether that particular amount received by the assessee can be termed as a income or not? Obviously, no. Let us understand, or let us detail discussion on this particular issue. Here, the assessee is what? Centron and Morgan's, a solicitor firm. Receipt. What amount of the receipt is being disclosed? 1 crore 82 lakh has been disclosed by the assessee. The amount as per TDS. Is 5 crore 56 lakhs. The assessing officer reason for the reopening is same main only. The assessee is being receiving the amount which is being very much reflecting in form number 26 as whether the whole particular amount is being termed as an income or not. Assessing officer was addition. Assessing officer is proposed the addition to the differential amount. Here we are covering the section 143(3) regular assessment procedure, 145 method of accounting, section 260A appeal to the High Court. Let us understand the court's observation as we are doing in all our cases. Court has specifically first understood the section 145 has mentioned that section 145 is in relation to how to maintain the books of accounts. What the particular things is to be followed for maintenance of books of accounts for the person who is being dealing in the business. Court's analysis on the section 145. Here the department's argument is what? The appellant argued that the difference amount, appellant means here the revenue has been filed the appeal, hence appellant. Appellant has argued that the differential amount of 3 crore 74 lakhs rupees should have been included in the assessee's books of accounts as a receipt and then claimed as an expenditure amount. That means I have said an example. I have received the 1,000 rupees fees as a fees for paying the CIT appeal fee. Whether that particular 1,000 is my income or not. That means obviously no. Assessee's contention is here. The respondent has maintained that amount received by the client as an advances and were spent on their behalf. Hence, should not be treated as a firm's income. That is amount. Here, how the particular assessee is being maintaining the amount. The amount is received by the assessee. In what nature? Assessee receiving the amount in a only fiduciary relationship, not as an income relation. Court's observation. The court noted that there was no adverse interference that could be drawn under section 145 as the money received from the client was not assessee's own income, but it was in which capacity? It was in fiduciary capacity. Here the interpretation of that particular word fiduciary capacity is must, because we are holding the client's money on his behalf. It's not our money. But the thing is that assessing here what the thing has been happening, assessing officer itself accepting that on finding in the assessment order that recognize that fiduciary assessee has received the amount in fiduciary nature of the transaction, thus which is being contradicting to the addition which is being made. That means assessing officer itself is being saying that amount received by the assessee is for reimbursement of certain expenditure, but the addition was made by the officer. What are the other case laws which is being referred in this for making the decision of this case? Here is the cases which is, I think here is the particular case which are not in relation to the income tax but other laws cases. Morley versus Translate 1939. Auctioneer held the money for the sale of client's horse. That means auctioneer held certain money for the sale of horse on behalf of the client. Can it be termed as his money? Absolutely not. Money was held in the trust for the client and did not form the income of the auctioneer. Another case, Damodar Das versus Morgan and Company. Solicitor, it is a solicitor firm. Solicitor firm received the money from his particular client, which is being used for the legal expenditure. For example, if we are doing any kind of deeds, and for that we have to pay the stamp duty registration fee, and we are transferring the amount to our legal advocate's account, and then the legal advocate is paying amount on our behalf. It cannot be said as his income. Bijli Cotton Mills Private Limited versus CIT. In this particular case, company has received the deposit from the customer for a future service. It means that company will have made an agreement for providing a services in the future. Can it be termed as a present income? Absolutely no. These deposits were held in a fiduciary capacity, were not not a part of company's trading receipt. Another case law referred by this court is CIT versus Motor General Insurance Company. The finance company has received the deposit which is being used for the financing of other activities. Can that particular financing of future activity can be termed as a present income? Absolutely not. What can be taken from these all case laws? The fiduciary capacity involves the legal and ethical obligation to manage other parties' money. Here, what we are doing, we are not managing our own money, but we are managing the other client's money. Can it be termed as our income? Absolutely no. From these particular things, I have established I have met the 3 principles to test the fiduciary capacities. Take away from this case can be termed as trust and confidence. That means fiduciary relationship is founded on the trust and confidence between the solicitor, between the advocate, or between the client or beneficiary. If there is no trust, then how can we get the money from the particular client? Duty to act in best interest. That means fiduciaries are obliged to act solely in the best interest of beneficiaries. That means that particular fund should not be used by us for our own purpose, but is being used for the purpose for which it is being granted. Separation of fund. Here is the basic criteria. Here is the basic things. We have to maintain the separate bank account, or I think separate books of account, or separate detail for the amount received from the client and amount deposited on behalf of the client, which cannot be termed as our income. Let us discuss another case. Principal CIT versus Divyaben Praful Chandra Parmar, which is being announced recently on 2nd January 2024. What is the question of law? Whether ITAT's action on this order is right on the various question or not. Here, appeal is being filed by the Revenue Department. Appeal is not filed by the SSC. Let us keep these all things in mind and discuss what are the basic questions is being asked over here. Definition for the addition under section 68. Was the ITAT was justified in the deleting the addition of 49 lakh rupees on account of unexplained income, where The assessing officer found that price movement of particular company, that is Sunrise Asian Limited share, was not supported by the company's financial fundamental. Here the question is what? The company does not have any financial fundamental, but the company's share has been getting high or company share has been getting jumped. Is the particular ITAT is being right in reducing the addition which is being made by the assessing officer? Genuineness of the investment in shares. Did the ITAT holding the investment in shares as a genuine based solely in this particular case assessing? The court has taken the other referred case CIT versus Jagat Praveen Bhai Sarabhai 2022 without considering the circumstances and probabilities. Here another thing, whether the ITAT is being right, although there are certain things being happening, did the ITAT ignore the fact that entry provider has been admitted that he has given the bogus LTCG entries through the multiple companies to the including Sunrise Asian Limited? Whether ITAT is being right or not, let us analyze. Manipulation of share price. Did the ITAT overlook the evidences that suggested that the share price of the Sunrise Asian Limited was manipulated, which was not justified by the company's economic fundamental? Whether the tribunal is being right or not, here is the question of law. Opportunity for a cross-examination. Here, in this case, the tribunal has specifically said that assessing is being provided an opportunity of being heard. In that, all the thing has been established. Then also the ITAT is being deleted. Did the ITAT heard the deleted the disallowance of rupees 98,000 commission payment to the broker, overlooking that the SS is finding that transaction was that to convert the unaccounted money into fictitious long-term capital gain. Let us analyze the particular case. This case is specifically deal with the bogus LTCG. That means bogus long-term capital gain. Here, issue is that whether the ITAT was justified in deleting the addition of rupees 49 lakhs, which is being made by the AO under section 68, which is being alleged as a bogus long-term capital gain on sale of Sunrise Asian Limited share. Which sections have been covering in this case? Section 68, unexplained case credit. Section 1038, which is being specifically for the providing the long-term capital gain, which is being exempt. At present, long-term capital gain is not exempt. SSE, in what is the fact? Let us see particular facts first. SSE has declared long-term capital gain of rupees 45 lakh rupees in a return, and assessing officer has been added 49 lakh rupees as an unexpected income based on the investigation report alleging that long-term capital gain was bogus. Assessing officer has a main source which is being considered. What is the main source for the assessing officer? Assessing officer's main source is what? Investigation report only, nothing else. SSE provided the extensive document, that is including demat account, bank statement, ledger account, all the things is being provided by the SSE, but which is being ignored by the SSE, and case is reached to the High Court. Department contention. What the department contention is that share transactions were not genuine and were used to convert the unaccounted money into unaccounted. Price movement of the share is also not supported by the fundamental. These things all has been findings by the department. Although findings by the department of the particular things, then after the SSE is being right or not. What is the court's observation? Let us see the court's observation on this. Analysis by the ITAT first, which is being supported by the Supreme Court, which is supported by the court's case. The ITAT is being observed. What the ITAT observed? ITAT is directly not removing, or ITAT is not dealing it at its own, but ITAT is not deleting the addition at its own mind, but they are observing certain additions, certain documents, and analyzing the particular thing. Then only they are deleting the additions. ITAT observed that assessing officer has been heavily relied on the findings and investigation wing without conducting the independent inquiry. Here, what the assessing officer has been not doing? Assessing officer is not conducted the independent inquiry. Assessing has provided the comprehensive document, but which is not being considered by the assessing officer, which must be considered. ITAT has been cited that Principal CIT versus Jagat Praveen by Sarabhai to support the view that transactions were genuine and assessing officers' conclusions were based on the presumption rather than the evidences. The assessing officer order was on the assumption basis, that means on the presumption basis only, not on the basis of evidences. Tribunal concluded that the transactions were conducted through the banking channel. Duty recorded in the demat account, duly recorded in the demat account and traded on the stock exchange with the payment of STT. That means all the transaction has been recorded through the security transaction tax payment only. Whether that particular transaction can be termed as an bogus. So if the particular transaction can be termed as an bogus, then entire stock exchange can be termed as an, that particular term can be questioned. So that particular thing must not be questioned, and document should be analyzed on the basis of evidences. ITAT found that AO did not bring any concrete evidences on the record to substantiate the claim that the long-term capital gain was bogus or the assessees was beneficial to the accommodation entries. In this particular case, the court has relied the other cases in this is which is the other case, Principal CIT versus Jagat Praveen by Sarabhai, which is being announced by the Gujarat High Court. What is the case over here? What is the fact? In this particular case also, the SSE has claimed the long-term capital gain under section 1038, which is being exempted claim, and on the basis of investigation report as a beneficiary accommodation entry. Here only the investigation report is being considered as in base, so that whether it is being valid or not. What is the department view in this case? Department is being argued that the long-term capital gain from the share of transaction was not genuine and was a part of scheme to convert the unaccounted money into accounted money. Whether it is being right or not, what the court is being said. ITAT view is copied by the ITAT view is only a court view in this particular case. Here, what the ITAT has been observed that ITAT observed the missing of the independent investigation. Here, the assessing officer has not made any kind of investigation, so that if the investigation has not been conducted, then it cannot be said that just on the basis of investigation report, we cannot say that the entire transaction is bogus. Transaction is being routed through the recognized stock exchange. Addition was based on the suspicions without the substantial evidences. If these all is being combined, then addition is never sustained and addition will be deleted by the higher authority. What the practical things, how this particular case law is being useful to us as a practical. We have to maintain the detailed record. We should encourage our client to keep the record throughout and organize records of the all financial transactions. Ensure the regulatory compliances. That means if we pay the security transaction tax through the recognized stock exchange, means regulatory, if we are following the regulatory compliances, then it will be very much helpful to us. Effective communication during assessment. We have to very much effective during the we have to be a very much effectively communication during the course of assessment only. Highlight of procedural lapse. If emphasis any procedural lapse by the tax authorities. If there is any procedural lapse, that means if the assessing officer is not being making the independent inquiry, then we should first prefer the assessing officer that you should make an independent inquiry, then after you should make the allegation, and then after you make the addition. If that particular procedure has been left, then the addition must not be sustained in higher courts. Let us have a discuss the another case laws, Principal CIT versus SU enterprises. Citation has been specifically mentioned over the screen so that I am not repeating the citations. So you can note it down from the directly from the screen. Here, what is the issue? Whether the ITAT was correct in causing the revision order which is being issued by the Principal CIT under section 263, which is being deemed initial assessment order by the which is neither erroneous or nor prejudicial to the interest of revenue. That means assessing officer is being issued a certain order which is neither prejudicial to the interest of revenue, neither erroneous or nor prejudicial to the interest of revenue. Whether the principal CIT can direct the particular officer to revise the any particular thing on the basis of certain opinion or not, that particular thing is being highlighted over here. Principal CIT noted that unverified claim of construction expenditure which is being leading to the setting aside for the assessment order with the instruction for the press assessment order. What the thing is being happening over here? There are certain expenditure which assessing officer is allowed on the basis of provision, and assessing officer is verified the certain payment for the same expenditure also. But the principal CIT is being observed that that particular expenditure should not be allowed on the basis of provision and directed for the revision of order. Whether the revision of order was justified or tribunal is right in removing the principal's commissioner's order and properring the assessing officer's order. What are the sections we are covering over here? Section 143.3 relates to the scrutiny assessment. Section 263 allows the principal CIT to revise any order passed by the assessing officer if he consider that it is erroneous and prejudicial to the interest of revenue. That means only the order which is being erroneous or prejudicial to the interest of revenue, that order can be revised. Not all order must be revised. If that particular thing is that all order must be revised, then the entire case which is being concluded, that must go for the revision of the order. Contention of the assessing officer. Assessing officer has been rightly scrutinized the construction expenditure which was adequate and as an evidence is by the subsequent payment also, and argued that assessment was conducted within the bound of the laws and making it neither erroneous or prejudicial to the interest of revenue. Assessing officer has been concluded its duty very proper manner, but principal CIT is not convincing nature, or not convincing, and is directed for the reassessment of the particular case. Principal CIT contended that assessment order was erroneous as it is failed to adequately inquire to the nature of construction expenditure claimed, lack of inquiry and its provision of expenditure. Whether the particular expenditure which is being claimed by the assessing claimed, if that particular expenditure is without any kind of inquiry or not. Let us see how the court has been understood and its observance. Court has been specifically mentioned that there must be a dual condition for the revision of order. That means if any principal chief commissioner, any principal commissioner wants to revise any kind of order, then there must be a two condition. There must be a two conditions should be met. Which two condition is that order must be erroneous and prejudicial to the interest of revenue. That means dual condition. If the both condition is being satisfied, then and then only principal commissioner can give the direction for the reassessment of order. Adequacy of the inquiry. Court has observed that assessing officer has been conducted the sufficient inquiry into assessee's claim and significantly regarding the construction expenditure which is justified at the initial stage. So why the particular unnecessary litigation should be opened? Legal permissibility. It was highlighted that assessing officer's actions were in bound permissible legal standard, therefore assessment was not erroneous. Assessing officer has properly reflected that entire provisional expenditure is being verified with the next year payment and with the entire nature of business. Then also the principal CIT is not convinced. Then why should unnecessary litigation should be opened? The court has analyzed that. Scope of revisional authority. In the income tax, the principal CIT is being given the revisional order that they should not exercise that particular power as it is. They should always use the particular cases and analyze the particular case and then make the order for the revision of order. Court has emphasized that principal CIT must show the substantial evidences or reasoning for why the assessment order should be revised beyond the just difference of opinion. Here, what is the happening? The higher authority and lower authority has a difference of opinion only. And on the basis of difference of opinion, the case cannot be reopened. Court specifically observed that. Protection of assessing officer's judgment. The court has protected the autonomy of the assessing officer. The assessing officer has been rightly decided, stating that the decision taken was a reasonable basis, even if it results the less revenue. It should not overlook unless it's unsustainable in the law. Although that particular assessing officer decision was generating the less revenue, but if it is not erroneous or if it is not prejudicial to the interest of revenue, then the order should not be revised at all. What are the other referred cases in this particular case? Malabar Industries Company Limited versus Commissioner of Income Tax. Erroneous or prejudicial requirement. Section 263. For invoking the Section 263, there must be a requirement if the order should be erroneous and prejudicial to the Revenue Department. Section 263 is applicable only, that means only when the order is demonstrably mistaken and adversely impact to the revenue. That means if there is any mistake which is upfront from the order and which is erroneous and which is prejudicial to the revenue, then and then only order for Section 263 should be exercised. Legally unsustainable orders. The assessment order can be revised under Section 263 solely if it fails the legal scrutiny and fundamentally incorrect. If the assessment order is being proper, then it cannot be said as legally unsustainable. Evidence of existence of two views. Section 263 does not, that means Section 263 does not permit the revision of order if the assessing officer's opinion and the principal CIT's opinion is being differing. That means on the basis of change of opinion, the order cannot be revised. What the practical things we can take from this case? High standards judicial review. That means while exercising the Section 263, strict criteria there should be there for otherwise the assessee getting harm in revision of assessment order. Importance through the documents. Highlighting the necessity detailed document and inquiry during the assessment to support the claim for the defense against investor. That means whatever the document you have, that document must be demonstrated or that document must be submitted before the assessing officer. Protection of legal interpretation. Here, the assessing officer is being generated the proper view, but the higher authority has been not convincing. Hence, the directed for the particular things. But we can cite the particular case laws if you are facing any kind of revision, any kind of revisions. Strategic use of precedents, that emphasizing importance of legal precedents. That means this particular court has also quoted the decision Malabar Industries Company Limited versus Commissioner to challenge that or defend against Section 263. That means we can also quote the certain decisions for defending to our case. Let us see the other case, which is based on the notional income. Aditya Vijay Mirchandani versus ITO. Here you can see the chart. I think everyone at present, everyone nowadays see the profit in his screen. Everyone is associated with the share market and seeing the unrealized profit on his screen. Supposing, for example, I have purchased the one penny stock of ₹1 and 1 lakh share has been purchased. But if that particular share has jumped to the price of 1,000 within a 1 month or within a 2 months or within a 1 year, but I have not realized anything from that particular profit. That means I have not sold anything from that particular script. Was it taxable? Obviously not, because it's a notional profit. It is not actual profit which is being in our pocket. Taxability of notional profit. We are discussing the taxability of notional profit in this particular case. The question in the center whether the notional profit from the unsold share as an indicated by the market price appreciation can be considered as a taxable income, specifically scenario where the no actual consideration. That means we are just seeing on our screen that 1 rupee has been jumped into the Havana 1000 rupee, whether that notional profit is taxed or not. What are the facts? The petitioner, that is Aditya Vijaybai Veerchandani, and respondent is an income tax officer. The petitioner was allotted 2 lakh equity share of rupees one company, Kam Lakshmi Finance Corporation Limited, at rupees 13 each on February 2014. The market price of these shares was very much jumped from 13 to 659 by January 2015. That means within a 1 year, the share price has been jumped from 13 to 659, as I have given in my example, 1 rupee to 1000 rupees. On 30th March 2023, ITO was issued the notice to the petitioner proposing the reassessment of income, arguing that the notional profit, that is difference between the allotted price and market price, should be considered as an escapement of, and it is escapement of income. Contention of department. Revenue contended that increase in the share value, which is notional, actually which is not realized by the office, realized by the assessee, represented the notional profit, escapement of the income. Reassessment was justified under section 148 AD or not. Let us see the court's observation. What the court has been saying. Non-taxability of notional capital gain. Court has specifically clarified that notional capital gain from the increase of share price without an actual transaction do not qualify as a taxable income. That means if we are seeing 1 rupee to 1000 rupee, that means 999 rupees was taxable as my income. Is it possible? No, obviously no, because I have not realized anything. Inadequacy of reassessment basis. The court in this case specifically criticized the sole reliance of the notional profit of the reassessment. That means the court has criticized the sole reliance of notional profit of reassessment finding is insufficient ground for the without actual income. That means if the assessing officer has just made an inquiry before the assessment whether the particular assessee is realized the particular profit or not, then that particular question or that particular query is been dropped initially, but initial inquiry has been not being taken and the case is reached to the High Court level. Misapplication of section 148 AD. The reassessment under section 148 AD was deemed inappropriate due to the lack of actual taxable event. Here the taxable event is not happening, hence the amount received cannot be said as a taxable. Dismissal of revision order. The court has specifically ruled that reassessment order was unsustainable and caused itself at present only, because if the case is been redrafted or re-forwarded to the assessing officer, then the assessing officer is being maybe doing the same thing again. So the assessment order is being caused at present only and not remanding for the consideration. What the important learning we can take from this case? Understanding the taxable event. Here we have seen that the taxable event is not being happening, but this particular case law can be used in other case. If the sales we have, supposing for example, I have sent a certain material to certain company, but the event of sales is not been occurring. That whether that particular sale, that means I have sent certain materials to the certain client for the verification or certain things, that bill is being raised in the next financial year. The sales is being happening in the next financial year. So that taxable event, that means happening of the event must be considered before. That means unrealized profit or unrealized gain must not be considered. Realized gain only be considered. That means assessing officer, if the assessing officer has been adhere to the procedural requirement, then that particular case should not, may not reach to the High Court level. The section 148 AD requires through the inquiry or justification before issuing the reassessment notice, underscoring the need of the tax authority to adhere the strictly the procedural requirement. That means we can quote the particular case law in our reference during the scrutiny assessment where the procedural lapse is being there. Significant factual accuracy. The judgment underscores the necessity for the income tax department to consider the all factual evidences submitted by the taxpayer thoroughly. That means here the assessee has also submitted the demat account. That the transaction has not been occurring in the demat account, but assessing officer is been not seeing and passed the assessment order. That must be considered. If that particular thing is not be considered, then we can also put this particular case. Legal clarity in the case law. This case provides the legal clarity for the application of law regarding the notional gain. That means notional gain cannot be taxed at all, contributing the body precedent that the guide for the taxpayer to advise the similar scenarios. Let us discuss, I think this is a last case law, but let us discuss the last but not the least case law. Ziadin Traders versus Assessment Officer, National Faceless Center. Here, what is the issue? Whether the assessment order should set aside due to its deviation from the initial so-cause notice. That means the assessing officer has been issuing the so-cause notice for the one reason, and order is being passed by the assessing officer for the another thing, whether it is being justified or not. The primary issue is that in the case whether the assessment order should be set aside, that is department issued the so-called notice for one thing and passed for the other things, and order passed for other things. Petitioner Ziauddin Traders challenged the assessment order passed under section 144B of the Income Tax Act, contending that the addition made in the assessment does not match with the proposed addition in the so-called notice. That means I have initially started, I have said that if the assessment is being, if the so-called notice has been passed, but the so-called notice has been passed with the for making the clarification in relation to the unsecured loan, but assessment order is being passed for the addition of bogus purchase. Is it justified or not? Because in that case, in so-called notice, unsecured loan document has been demanded, but the order has been passed for the bogus purchase. Then it can be said that opportunity for submission of that particular detail is being not been given, so that assessment can be posed on that basis. Assessment order made contention. What is the contention of assessing officer? Assessment order made to the petitioner's income were not in line with the proposed variation in the initial so-called notice. Revenue's contention that inadvertent mistake in the calculating during the so-called notice. Is the mistake is being allowed or not? Let us see what is the observation of court. Court has reproduced the relevant section and its interpretation. Procedural error. Court noted that significant error as an assessment order does not match the so-called notice. If there is an error, that must be rectified within the time. If that particular error is not acknowledged, then assessing officer has not given a sufficient opportunity to the assessee for being heard. The error in the assessment was acknowledged and undisputed, irrelevant for the territorial jurisdiction. The faceless assessment scheme makes the geographical location of the assessing authority irrelevant for the coast jurisdiction. Whatever, here we are discussing the case for the National Faceless Center. Is the case can be fit for the jurisdictional? Then obviously yes. No benefit in the remanding. The case, if the case is remanded, then what is the issue? The case has been remanding the court. The remanding the case would not serve for the purpose, especially since the power of remand is restricted. Direction or remedial action. Court, what the court has been doing in this case, the court has set aside the order and directed the petitioner to respond to the so-called notice within a set deadline. That means whatever the issue has been passed in the assessment order, that can be termed as a so-called notice, and assessee is being granted another opportunity by the court to submit their document within a specified time limit. I think I have covered the all particular case laws which is being presently relevant. At present, whatever the issue is being covering, I think I have covered the all the case laws. If there is any question in relation to these case law or anything you are want to ask me, then write the particular thing in comment box along with your email ID so that we can try to resolve your queries and we can help you out to the usage of the practical case laws. Thank you all for patience and thank you all for patience hearing and thank you for connecting. Stay connected and be updated with us. That with a tax guru, stay connected and stay updated. Thank you all.
थैंक यू वेरी मच सर, बहुत अच्छा सेशन रहा आपका।